Now to our first conversation. According to the NBS, since the first quarters of 2019, 2020 and 2021 and 2022, there's been a steady decline in capital inflows into the Nigerian economy. In the Nigeria Capital Importation Report, capital inflows fell by 67.45% to $1.91 billion in the first quarter of 2021 and declined further by 17.46% to $1.57 billion in the first quarter of 2022. Let's discuss this and other matters now with Mr. Olukorede Idi, CCIB Standard Chartered Bank, joining us via Zoom. Great to have you on the program.
Thank you very much. Nice to be here.
Yeah, so before we drill down on the numbers now, Standard Chartered Bank recently hosted the Global Research Report event to throw more light on the Nigerian economy, especially in the financial and oil and gas sectors. What are the key highlights you want policymakers to take away?
Okay, thank you. We had two panels in this global research session that we had, which was a whole day. One panel was on monetary policy. The other panel was on oil and gas. The topics and the issues that came up, which policymakers and the audience appreciated, was one. And I mean, you saw the report earlier on by the MD of NNPC. One is about driving up oil production. The second one is, at some point, whether we like it or not, the country cannot afford the fuel subsidy. So it's the panel also mentioned recommending a gradual removal of fuel subsidy and different ways of doing this, as well as, of course, the third one, which is the issue of FX policy and some sort of liberalization. It was very well received. And it's something that we should all keep tabs on.
Yeah, quite interesting conversations there. But what are your thoughts about Nigeria's ability to attract portfolio flows? You know, at this time, looking at the figures there, it's been declining.
Certainly. I mean, you just mentioned that in your last report as well. And it's all about creating the enabling environment to attract the flows. The CBN has put quite a number of initiatives in place. One of that is the issue of giving rebates to exporters. They are also encouraging import substitution. They're encouraging export promotion. Rebates are in place to actually encourage exporters. We need to do more concerning intangibles, which are remittances. How do we encourage diaspora flows, to come into the country? How do we encourage them? The central bank put in place that 5 naira per dollar policy to also encourage them. A lot is being done on the part of the central bank. So it's just all about the environment. How do we get the environment to actually attract remittances to come in via diaspora flows and other remittances, as well as export promotion?
And what about foreign direct investment? How do we attract more of that, considering where we are, with the FX issues, getting those funds out is also a problem.
Oh, absolutely. And again, the elements that I mentioned earlier on in the last question also applies. Apart from that, for the FDIs, or portfolio, I would say portfolio investors, not direct investors. It's also one of the environment, the ability to get your money out. Once you know that you can get your money out, of course you would want to bring your money in, and all those measures being put in place to encourage them to actually bring their money in, and guarantees or soft comfort. Central bank has been giving them soft comfort that nobody's money will be stuck in Nigeria. Those kind of positive rhetorics, would actually encourage them to bring their funds in because they know they can take their funds out. So more of that, should actually encourage that. Further to that, don't forget also that interest rates also attracts. Higher interest rates also attract foreign portfolio flows coming into an environment. Again, you have seen what the central bank has done. Interest rates are on the rise, though globally, but we have also encouraged and we have also responded to that, increased the MPR consecutively, at the different monetary policy meetings, monetary policy committee meetings. And therefore, with increased interest rates, you expect that portfolio flows will actually respond to that and also come to the country. So a totality of all those should actually bring some stability and inflows, further inflows from portfolio investors.
Quite interesting. And, some quarters have, said that we shouldn't be hiking, at this time. Countries like Nigeria shouldn't be, raising rates at this time because we have, other structural issues. What's your view on that?
Two things. One is that is the answer that monetary economists actually have, to actually tame inflation. You do not expect inflation to be in the 20s and a depositor to be earning 4% on his deposits. He has a negative real interest rates. So you just have to hike to encourage depositors to actually keep their funds in the bank. And the other side to it also is reducing spending. Interest rates actually reduce spending, encourages you to keep your money in the bank. And for those who are using credit, it reduces the spending. So that is the answer to actually taming inflation. So we need to look at the inflation end of things as well. I'll take a pause here.
Right, and looking at, where we are now with rate hikes, how are your clients, that get those loans, how are they reacting to this? What's the how's the impact on most of those the demand for loans at this time?
Let me talk about the expectation. The expectation is that loans for consumables obviously will reduce. The impact is that for capital items, you expect a rethink by the different sponsors whether to go ahead or not. Having said that, the trickle-down effect, we have not started to feel that impact, but in a few months we should see the impact in terms of the effect on borrowing.
Right, quite interesting. We're looking out for that. But, considering this is a pre-election year, should we expect to see a bearish position, from the bank at its risk appetite towards corporate client projects at this time?
I would say I'm very positive about Nigeria. We have had 6 elections from 1999 to date. We're going to the 7th one. We're not going to continue starting and stopping the whole economy because of elections. The elections would come, the elections will go. We would have transition from one government to another, whether it's the same party or not. But it becomes business as usual. So for us, whether you have elections or not, the country has been tried and tested. 6 elections, we're going to the 7th. Business, we go on business as usual.
Right, and what is your position, towards commitment to promoting sustainable finance solutions in Nigeria? Because that is actually much needed at this time.
Excellent. The bank has quite a number of initiatives with regards to sustainable finance. Sustainable finance is really, really, really at the heart of a lot we're doing now. And therefore, we're encouraging companies, we're working with them to see how they can transition from fossil fuels, transition to cleaner sources of energy. We've gotten quite a few initiatives in place. We have funds. The bank at the group has mobilized and is mobilizing about $300 billion in funds to see how globally we can assist our clients. And therefore, we continue to do that. On the ground, we're encouraging our clients. We're giving them financing to move one from fossil fuels to clean energy, reduce their cost of production, as well as also move forward towards the commitment of net zero, which not only the bank but major corporates as well as major sovereigns have actually committed to at the different the Glasgow Convention, COP26, and again COP27 that is coming. So we really would have no choice. It's the good thing to do. It's the right thing to do. We continue to support our clients in that direction.
And obviously, Nigeria's mainstay right now is oil and gas. And how are you able to balance, catering to your clients that have not been able to, move away from to the net zero plan, at this time? How are you balancing, providing for these clients?
Excellent. Surprise, surprise, quite a number of clients, including also the different oil corporations, are actually moving their energy, moving a lot of their production also into gas. Gas is a transition fuel, and therefore a lot of significant funding is actually going into either gas production, gas piping, gas utilization, whether wholesale, whether retail. A lot of funding is going into that. A lot of solutions are being offered by Standard Chartered Bank in that, and we will continue to support the clients with regards to that. So it's not only about fossil fuels, but it's also supporting them towards a transition into gas and alternative sources of energy. So easily we can resolve that dilemma. The second point also is don't forget that when you also commit to net zero, it's not as if it's business as usual using fossil fuels, but again, you can actually purchase carbon credits to take you further as a corporation into meeting your net zero commitment. For example, the airline industry. I'm not sure there's an alternative yet, to reduce the carbon emissions that planes are actually producing, as they fly the skies. So again, they can come together, buy carbon credits, and also ensure that they get to the net zero commitment. A lot of those solutions we're actually putting in place for clients.
Quite interesting. And, there have been conversations about how, the fintechs and the banks are kind of getting in synergy, at this point. How are your plans for fintech right now?
The bank is, yes, we have the legacy bank, but what the bank has also done is purchased fintechs not only globally, but also here in Africa. We have fintech companies that we have purchased that are actually also working with the bank to actually bring world-class, first-class technologies to actually diversify the legacy systems. Make them more agile, make them more dynamic, and make them more mobile. For our clients. So yes, we are very big one proprietarily in supporting fintech program, but also inorganically buying fintech companies. But not only that, offering solutions to fintech clients. Recently, we have a staff from Nigeria who's going to join our fintech team, also in California. Those are the kind of things we're doing to actually bring in expertise and enhance our own expertise in the fintech industry, which ultimately will drive our own legacy systems here, transition the legacy systems, and also at the same time provide solutions for our clients in the fintech industry in Nigeria.
All right. Thank you so much, Mr. Olukorede Adenuwa, ED, CCIB, Standard Chartered Bank. It was great having your perspective on the show today.
Thank you very much, and I appreciate it, Channels TV. Thank you.